March Madness of a different kind in real estate. Let's talk numbers. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. We're in March, we're looking at last month's numbers. That does mean February, but the market took a huge shift between January and February. Let's look at the numbers and talk about the market day in and day out today. Certainly March Madness applies for what we're looking at right now. Buyers put 4,000 homes under contract in February. This is down 8% from last year and down just 2% from the year before. We saw only 3,200 homes close in February. This is down 14% from last year and down 11% from 2 years ago. There were 4,100 new homes that hit the market in February. This is still down 6% from last year and down 14% from 2 years ago. The good news in that number is it is 700 more homes than we had the month before, which was January, but certainly it is not enough to satisfy buyer demand right now. So under contracts, closings, new listings, this year, they're all down compared to previous years. If we break that down between single family homes and our attached homes, our condos and townhomes, the segment that's faring the worst is actually our attached homes, our condos and townhomes. By percent change overall, we're getting fewer new listings of those. Obviously, that means fewer closings. We finished last month with just under 1,800 properties for sale, giving us 17 days of inventory. Now, this was 3 days more than we started the year with, so the trend is headed in the right direction. This is down 2% from the year before, so hey, not bad, right? Well, it's down 57% from 2 years ago. Oh my goodness. This is the market that we're feeling the pinch in so bad. Last year we felt it too. Oh my, how we wish it would change and we had so many more homes to sell because the buyer demand is certainly there. We are now in our 20th straight month of less than 1 month of inventory in the Denver market. Average days on market, the average time to sell homes is 14 days, down 6 days from the previous month. It's also a decrease of 23 days from the year before and a decrease of 37 days from 2 years ago. And if you've been watching these videos for any length of time, our median days on market dropped right back down to 4, where it was for a really good chunk of last year. We were 5 days for our median days for a couple months this winter. All right, let's talk about that list price to sales price ratio. We had gotten back into that 100% range, right? Whatever it was listed for, it was selling for on average. Well, February blew that up. In January, we were at 100.8%, not too shabby. Well, by February, we've hit 104.5% for sales price to list price ratio. Given that we're just 2 months into the year, I'm worried about just how high that number is gonna go. We didn't crest 106% on this number last year. I suspect we might go to 108, maybe higher, if things don't change for this year. Even with all of the uncertainty that we're gonna talk about in a little bit. The average closed price for all homes was $641,000. That's an increase of $41,000 from the month before. More importantly, let's compare year over year. That's an increase of 18% from last year, and we're up 35% from 2 years ago. So let's break it out. For the single family homes, the average sold price was $736,000. The previous month, it was $679,000. That $736,000 is up 18% from the year before and up 38% from 2 years ago. For condos and townhomes, the average price is $452,000. That's just up $3,000 from the month before, so not nearly as painful. However, from a year ago, it's a 14% increase, and from 2 years ago, it's a 24% increase. All right, let's shift over to median home prices. For all homes, it's $572,000, an increase from $540,000 at the start of the year. That's an increase of 22% and 36% respectively from the last 2 years. For a single family home, the median price is $632,000. That's up 20% and 36% 7% respectively over the last 2 years. Hey, this is kind of good news. The median price for condos and townhomes held steady, $400,000. But if we look over the last 2 years, it is still up 19 and 29% respectively. All right, some deeper analysis into this market. The number of closings that we had in February was the second lowest number of closings we've had in 5 years. Really not surprising considering the low inventory we had in January, right? It was so low, so painful. Buyers were looking at me and going, are there ever gonna be homes that I think are attractive? Are there ever gonna be homes on the market for more than 1 day? January was really painful. The price range that saw the most closings was 670 sales, was the $500,000 to $600,000 price range. Didn't matter the home type. For the 2 years prior to this, the most sales were in the $400,000 to $500,000 price range. And in the 2 years prior to that, in 2018 and 2019, so we're talking pre-COVID era, the most sales were in the $300,000 and $400,000 price range. What this tells me is that what a starter home is shifting. Maybe that's not a huge aha, right? That happens over time. However, given how rapidly home prices have increased over the last 2 years, I'm a bit surprised that the largest number of sales is still in the $500,000 to $600,000 price range. I'm finding that this starter home shift is moving slower than I expected it to be. To me, that's reflective of two things. One, it's in keeping of the average salary across Denver. So yes, Denver is a tech city and we have a lot of high-paying jobs, but as I've done in the videos where I look at cost of living here, not everyone is making 6 figures and better. The average salary really is still hovering in and around the $70,000 range. 2, this price point is the one that investors really like. And we've had a lot of investors jumping into the market. All right, so what are the takeaways for you? One, as you know, the market is really volatile right now. And I'm not just talking about the real estate market. Our economy, the stock market, real estate market, everything is very volatile right now. This market update, which is probably a week later than usual even as the data came out late, is coming to you weeks after the data has been pulled. So this data is all for February. By the time it gets delivered to me, I analyze it, I record, it gets edited and then posted. We're looking at it a few weeks after the data has been compiled. So this month's data is for February. Right at the end of February, the Russia and Ukraine situation began, and that has made for a lot of interesting stuff heading into March for sure. We've already had some volatility in our interest rates. That is continuing. I have had some lenders tell me they think we've roughly hit our peak for a season. But what's going on globally with politics is affecting the economics, the stock market most certainly. I'm hearing a lot about crypto volatility. And then we have inflation in our own economy. All of this is making the folks who are already shopping for homes very ready to get in them. Very ready to put their loose liquid funds into a house. Very ready to lock in interest rates. So that has been a lot of what's been churning through February and this early March. High demand, high bidding wars, speed in the market. We're seeing houses that are going on the market on late Thursday, early Friday with the intention of coming off on Sunday or Monday. And then by Saturday night, offers are due. A really strong offer came in with what we call a bully deadline. You know, you have to respond or the offer's off the table and the house is gone. No showings on Sunday. We took the great offer. A lot of what we're talking about here is driving that. And then on the other hand, this time of year, I'm usually talking to a lot of people who are planning their move for 3 months out, 6 months out, sometimes a year. That's quieting down. People aren't really sure what to do with all this volatility. That's kind of a wait and see thing. The folks who've been around the block a time or two, who have bought homes, they are very ready to lock in rates, buy homes now. They are not concerned about these 4%, 4.25% rates. They see these as historically low. They do know they're a whole percent higher than these were last year, but that's not turning them away. It's more of the first-time home buyer, the newcomers to the market who didn't get a home last year, who recognize that they essentially lost a percent interest rate in the market and feel like this 4% is a pinch on them, who are hesitating or worried. And it is. A 1% increase in interest rate is a big deal. These are still historic rates. They are fantastic. There are parents and grandparents of these buyers who had 13% interest rates, 18% interest rates. Those rates are painful. So 4% is still fantastic. If you can lock that in and it works in your budget, let's do it. Now, maybe you're one of these. What about my buyers who do not have 6 figures of cash laying around to compete strategically in these wild bidding wars? Because yes, for a lot of homes, these houses are going 6 figures over. Maybe it's 85,000 over. Unless the appraiser says the house is worth what that offer price is, there's gonna probably be a little bit of cash that has to come to the table to make up the difference. And a lot of my buyers right now don't have that much cash to show up with, while they're also bringing their down payment to the table. So what are we doing? How are we strategically managing this? There's a couple different ways. We may be looking at homes that didn't sell over the weekend, so it's a straggler home. We may be looking at different types of homes. If they wanted a single family home, maybe we're able to, depending on their needs, transition to a townhome, a duplex, something of that sort. We might be able to look in a different location, somewhere with slightly less demand. Maybe the bidding won't be as high. We might be looking at new construction. The bidding wars aren't there with every single builder. We can certainly look at a house that is not as move-in ready, as pretty, is not going to demand the same overbids. That one is probably the one I have the least takers on. Most people don't want to do the work, but some do. And then there's the discussion of the risk and reward ratio of waiting to see if this year's bidding cycle matches up to last year's bidding cycle, which means the bidding wars may taper off by around late July or August of this year. And if that's the case, a lot of houses are going to be available for roughly list price. And that's fantastic news. The other thing is to make sure we've tapped into all financial options. So I have great lenders for that. To make sure we've touched on every financial avenue. If right now, this location, this type of house are the musts. So we really make sure we've covered every possible scenario. Sellers, what are your takeaways? This market is prime time, just like last year. Maybe you were thinking about it last year and you didn't, but you know this is your season. You're not gonna wait till next year. You can't wait till next year. Jump on the bandwagon. And what are you looking for in an agent? Maybe you're not in this market, but your market's hot. You really wanna capitalize while you can on these bidding wars, the number of people that are striving to get into your home because of low inventory, the people who need a house and have to compete for one. And what are you looking for in the agent who's going to manage this scenario? Because not every house is selling in one weekend. You've got to have an agent who knows how to handle multiple offers and get everything out of them that they can. Multiple offers does not mean you just hand over the 5, 10, 25 offers to your seller and say, well, here's the top 3. Which of them do you like? That is not maximizing the situation. You've got to get as many people through the home as possible. The agent needs to be requiring terms of the buyers that benefits the seller. And buyers, I know you don't want to hear this, but we need to be playing the offers off one another in a professional and respectful manner to get the best we can out of the buyer for the seller. And when possible, getting the buyers to tip their hand to the very most they're willing to pay for the house. And then sellers, this is really important. And then getting an offer that protects the full written offer price so that you're not left having to reduce the price if the appraiser doesn't come in and agree with the value in the offer. There are lots of other things that go into it, but that's a good summary. So sellers, do your due diligence for who you're looking for to sell your home, no matter which city you are in. And I say this with passion because I have had my peers tell me, I don't want my sellers to have 25 offers on their home. That's just too much. Well, your agent is the one who's supposed to help work through that with you, help you be sorting through just the few top offers, showing you what the remainder is in case you wanted to look at them. You aren't supposed to look at 25 offers. You're supposed to look at the best 5 or so. That's all. Don't have an agent who says, I don't want you to have 25 offers on your home. In this market, that's exactly what you should be shooting for. 12 to 25, depending on how much traffic you're going to get, depending on your location. Buyers and sellers, know this. As I've said, not every house is selling in one weekend. There are stragglers and actually quite a few. So sellers, put your best foot forward. Buyers, be prepared to know what it takes to write a great offer on a house that you want that is going to sell in one weekend, and work with your agent to figure out why is a house a straggler so that you're writing a wise offer on the left behinds. You could get a great house, but you definitely don't want a money trap. And if this year's market follows last year's market, the bidding wars are only around for about 4 more months. That may worry the sellers and hopefully is a bit of a breath of fresh air to you buyers. Thanks for tuning in to the March market update. And if you have thoughts or comments about the market or want to share some of your crystal ball thoughts of what's coming up for the economy or real estate, please leave a comment below. And I will see y'all next week.